Hey everybody, Pure Bullion here. It's Wednesday, December 18th, and it was a huge day in the US stock market. Specifically, the Federal Reserve, for the third and final time this year, have done a rate cut by 0.25%. It has gone from 4.75% to 4.5%. The equity markets, the bullion markets took a hit today. Some of the most popular ETFs are down almost 3%. And specifically, silver is sitting at about $29.80 a share right now as we speak. And obviously, the federal government has a spending problem, and inflation, according to the Federal Reserve, might not tame until 2027. That means at least 2 years of what we're seeing now. Their goal is a 2% inflation rate. Jerome Powell has said that he wouldn't even be satisfied with 2.5%. So they're expecting potentially 2 more rate cuts in the year 2025. So what this means is that just investing into CDs, bonds, or your high yield savings account is not going to have as much as a return as it had before. This could potentially artificially inflate asset markets like we had low interest rates in 2008. Not saying that a crash of that magnitude could happen, but it's generally not a good thing to keep reducing rates this much. Most importantly, inflation will probably continue to uptick, who knows how many percent points next year. And the most important thing to remember is that bullion, and one of the most accessible pieces of bullion physically, silver, is one of your best hedges against instability, inflation, and uncertainty. I think under the $30 mark now for per ounce of silver, it's a good time to get in, whether you're looking at an exchange traded fund version of silver or the physical bullion. It's a great investment to have in times of uncertainty, and it looks like the United States will continue to have that for at least the next 2 years. Have a great night, everybody. We'll catch up soon.